So today is Thursday, August 8th. Market is doing okay, at least my positions. Looks like SPY is rebounding from some of the shocks it had this week. And that is why you need to take advantage of the high implied volatility and the oversold conditions when you can get them. So I've been taking off my winning trades manually as they come. But for Apple and Tesla, which are both expiring tomorrow, they're pretty far out of the money. And you can see the profits on those. Tesla, quick $150, 93% profitability. Apple, easy $246. So, $400 in less than 5 days for just selling out of the money puts on stocks that had started to reverse. So with Apple, the reason I opened that position, it was on Monday when the market was really down. Yeah, that would have been on the 5th. And I sold it I sold it after hours on the 5th because I could see that it had opened at 197, hit a low of 192, and then started to close a little bit up. And it had gotten so oversold that it seemed improbable that it was going to last that long. Look how oversold these indicators were. And the implied volatility was absolutely exploding. So I needed to take advantage of that. Sold the weekly 20 delta puts. They were 20 delta, so had about a 20% chance of going in the money that week before expiration tomorrow. Doesn't mean it couldn't go in the money, but if it did go in the money, then I would have rolled it a week, and that would have been fine. So what happened was the next day, it already became profitable, and then the day after that, hugely profitable, and now today, you can see that it's over 90% profitable. Normally, I would recommend taking profits on that, but because there's 1 day left till expiration, and it would have to drop $10 at least for me to lose that profit. Right now, as long as it expires tomorrow at 190 or above, as long as Apple stays above 189, because it can expire at 190 and no one's going to exercise that option at 190 when they can buy it on the open market without paying the exercise fee. So as long as Apple does not close below 190 tomorrow, I'm going to keep this easy $246. I did nothing. In other words, the effort was so minimal compared to any other job. I mean, and this is obviously a small position, but you could do this with Amazon and make $2,000 depending on what delta you chose. But it's just the best way to maximize the input of money and minimize the outflow of effort. And I generally have a bearish bias in most cases, especially when the markets are calm, because when it goes bearish fast. The stocks take the stairs up and the window out, as you'll see in the next black swan event. Monday was definitely a black swan event, I would say, and I wanted to take advantage of that by taking advantage of how high the premiums were for these puts, because that's protection, and because I wanted to get into Apple at a cost basis of 190. That would have been fine. They would have put 200 shares on me if Apple continued to go down. But considering where Apple was just a few weeks ago, back in the end of July, we're talking a high of 221, and that was right around earnings. So people who bought in at the top, they got hosed. And then looking at the Ichimokus, so Ichimoku is forecasting flattish near term but bullish long term. There was just a Ichimoku breakout. So I'm going to wait until Apple's down again and sell another put, because I would like to lower my cost basis. And then if those shares get put on me, then I'll start selling calls against them. In my case, every month, because you take advantage of premium when it's high on those rare events, and then you get a lot more premium than if you just sell weekly. But selling weeklies, if you can manage it, is a higher probability trade because you're constantly resetting your strike price to be within the 20 delta of where it's just a more accurate way to set your strike prices versus trying to guess where the stock's going to be 4 weeks from now. It's easier and more accurate to guess where the stock's going to be 1 week from now. And there was one other trade I wanted to show you. That's TGS, because that turned out to be profitable today. TGS had been a big loser for a while, and today it's up $525. So that recouped all of my losses and gave me a $20 profit. So you can see the short put is still not profitable. It's negative 3% profit, but it had been negative 222% on Monday. Negative 222% profitable on Monday. So that has recovered all of those losses, and a big factor into why I have a $1,300 gain today. I'm up 2.4%. Quite happy with that. It's going to be a good day if things continue to head where they have been today. So the reason I got into TGS was because of the implied volatility, of course, and how overbought everything was. So it actually was around here. I have to double check with Gainskeeper, but yeah, it was right around here. I remember using my watch list scanner, and it had shown that RSI and implied volatility were good. So implied volatility had started to go down around here, but it is still good enough to sell calls, and I ended up doing a strangle. So you could see that now the Ichimoku Tenkan is bearish. That's predicting short-term bearishness. However, the span A is very bullish. That's a long-term good sign if you're bullish on TGS. But you could see, just like most stocks, they go from overbought to oversold. And without even looking at the stock chart above, I could pick any random place on the chart when it goes from, without even looking at the chart, for example. Let's just pick one place where all three of these indicators are overbought, for example. So I'm looking for, all right, here we go. Here's one. See, we have Stochastic overbought, Williams, and RSI overbought. And what happens? It goes up and then down. You could have gotten out here. And I bet it's close to oversold right around here. Yep. And if you waited until even further right around here, actually, let's wait till the RSI goes oversold. Yeah, here. There's a good one. See how oversold that is right there? There. So you would have bought in there. Nice little gain. Wait till it starts to go up. And this one, you got to be careful. If you waited too long, then you would have gotten hosed. You'd also have to take advantage or keep abreast of the Ichimoku. This is a bearish Ichimoku. Span B is forecasting bearishness ahead for quite a while. And then if you got in here, still got a bearish Ichimoku, but it was definitely oversold. So it would have been a good entry point, stay in, and then once you get up to here, get out. And then once the Ichimoku starts to turn bullish, right around here, that means there's a reversal coming, a bullish reversal, longer term. And that was here. So I can go into Ichimoku again another time, but the point is, take the profits when you can. 17%. I'm going to put in some lofty buy to close orders, because that TGS could screw me again royally. So let's make it just outside the limit. Yeah, there we go. 40. That. And then we'll do another one just cheaper than that. And we'll pay a debit to close that out, but it'll protect the profit when we have it. So you can see right now, see how quickly TGS is changing already. In fact, because it's already, see, it just went negative. See, just as we were talking. So what I am actually going to do is just close this damn thing out. I don't normally do this, but you can see how I could quickly lose those profits. And it canceled those other TGS buy orders. So let's see how far away. So it's at 118. It has to go down to 0.95. That seems pretty impractical. So here's what we'll do. We'll actually readjust this. Let's make it a little more realistic. So do one there. And then one with a little bit more optimism. See if that triggers. And they should both be GTC. Yes, they are. So it doesn't have to fill today. Because I want to get out of those. They fluctuate too much. I wouldn't necessarily recommend TGS, but the setup was good. It was high implied volatility. Saved my money for another. And using my watch list, I have a few that are based on my personal scanners. So overbought, oversold with 80% implied volatility. See if there's anything that shows up on this one. Let's sort it first by mark price. So yeah, that usually also makes it have higher volume, but these are all pretty inexpensive stocks. And they're overbought, oversold with high implied volatility. So if you look at BRY, for example, that one has a double bearish Ichimoku. Applied volatility, just exploding right there. So, and you can see how far it's fallen there. That's quite tragic. What I'm going to do on this one is see how much I can get for just a strangle. So nothing, no bid values for this month. And actually, I'm going to make this into a separate video using my watch list.